Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning, folks. Welcome to Financial Issues. It is Wednesday. We've made it to the middle of the week here. Grateful to have you this August the 20th. Seth Udinski here with you, as well as Sam Case, the Studio A team. Our friend Mark Minnella is going to join us a little later on in the show as well. We got a great show today. Sam, let's do it, buddy. Once again, ready to roll. Going to have some fun.
We're here to roll, man.
That's right. So we got Mark joining us later in the show, folks. He's going to discuss the right ways we should discern and decipher the information that we receive during earnings season. I'm excited to hear Mark's take on that. Speaking of earnings season, we did get a few more retail companies reporting this morning, so we'll take a look at those. Also, your comments and questions, make sure to say hello wherever you're watching. A special hello to our friends in the FISM live chat. Good to see you all there this morning. But anyone, if you're watching or listening this morning, we're happy to have you as well. Also, if you saw the show yesterday, folks, Nick Vujicic joined me to share his experience on getting debanked. Nick, of course, very famous author and speaker, and he also had his own experience of getting debanked. Well, today, apparently, we got some news out actually yesterday that we're going to talk about today. Apparently, there were some pretty powerful forces behind this whole debanking mess that we saw in these last couple years. Nick ended up being somewhat tertiarily affected by this. They just so happen, those forces, to be the 44th and 46th presidents of these United States. No surprise there. We'll discuss what that means and the implications of it. Let's get it started, Sam, with some earnings reports here. Lowe's reported this morning. It beat slightly on earnings per share. It actually hit right on target for revenue, but I think Lowe's feeling pretty good, especially coming off of Home Depot's rather disappointing report yesterday. Lowe's might be the beneficiary of that. Target also reported before the bell this morning. Not as good a showing as Lowe's, Sam, I think. Earnings per share beat slightly. It also beat slightly on revenue. However, the pre-market trading was down significantly. Target's CEO has stepped down, and of course, you've heard on this show, there's been a lot of hullabaloo surrounding Target, much of it from its own hand. And so, of course, there still seems to be some concern surrounding Target. Even
they acknowledge in that earning report that they're still bleeding sales, so the markets weren't too happy about that.
Absolutely.
Not too impressed.
Yep, you can see, if you're watching our TV feed right now, folks, you'll see some images coming up from 2023 of when Target was selling the tuck-friendly bathing suits and appealing to all the gay stuff. They have not recovered from that. They've got backlash now from both sides. Also, Sam, I think this flies under the radar too, but Target has been an unfortunate victim of what has happened throughout many Democrat-led cities where crime is rampant. And so Target has suffered from that as well. So that's what's happening there. One more.
Well, we saw that with the George Floyd riots. One of the first things that happened was people raided Target. And they saw the Target and they took advantage of it.
Target's capital city? Minneapolis. It's all that same area there. So interesting to see that. TJ Maxx also reported this morning. It beat on earnings per share, beat slightly on revenue as well. So we got one more big retailer to report. That's Walmart. They're going to report tomorrow. The markets, meanwhile, folks. So yesterday, following Home Depot's disappointing earnings call, the markets opened in mixed territory. There was some optimism notwithstanding, especially in the Dow Jones, actually. Midday, the NASDAQ was struggling. The S&P 500 a little bit as well. By late afternoon, we did see some tech sell-off, so the NASDAQ was down pretty heavily. The Dow Jones finished with its head above water. The S&P finished about a half percent negative, and the NASDAQ was down well over a full percent negative. Pre-markets this morning were kind of muted, and they still are right now. They're slightly negative, pricing into open slightly negative, but they're awaiting the Fed meeting minutes from July, which comes out later today, right around 2 p.m. Eastern time. So that's the big news for today. Again, Walmart reports tomorrow. Folks, it's great to be here with you. Let's turn our attention now to a headline that I found somewhat fascinating, Sam, this idea of job hugging. Can you tell us what in the world is job hugging and how are
Well, you ever been lonely and you just need a hug? People are hugging their jobs now.
I love my job. I just don't know how I could give it
it's kind of weird. Jobs don't really have arms or anything to hold you near and dear, but that's what people are doing. So yeah, this comes on the heels of less than stellar labor data, but you know, during the COVID era, we heard of the Great Resignation. Now employees are pulling a 180, basically clinging to their jobs for dear life. That's what the report said, as employees are now holding onto their jobs at levels we've not seen in nearly a decade now. So let's break into the numbers a little bit. The quits rate among U.S. workers dropped to 2% in June, far below the 3% peak of November 2021. So we are getting back into more healthy levels, but I think the mindset behind this isn't nearly as productive as we want to be, because people are actually afraid right now to quit their job out of fears they're not going to be able to find something else. So there's kind of this wait and see attitude taking hold across the entire economy, from we've talked about with the Fed, but also the labor market now. And earlier this week, we talked about the home builder market. So that's not the best type of health you want to see in the economy. And it does come with some risks. People think about keeping their job because it's going to protect them. But as we've talked about repeatedly on the show as well, everything comes with risks. So with job hugging, as they're calling it, it actually makes you a little skill stagnant in the job market. So once things improve, it's less likely you are going to be hired. By the way, people also often switch jobs to improve their income. It's one of the best ways to improve income is to switch jobs rather than waiting for a raise at your current job. So that is also a problem as well. People are not seeing higher income, partially because of this as well.
Sam, I appreciate you bringing that up to us. You know, these concepts, folks, they're vital to consider for any in the workforce. I know much of our audience is retired. A good portion of our audience also, like me, like Sam, are in the workforce full time. I would encourage you. So we're having Mark on later in the show. I did an interview with Mark a few weeks ago. I think it was July 31st was the date of it. So July 31st, we talked about the biblical definition of work and how to make sense of when is it time to leave a job? How often should you stay in the job? How can you make the most of your job and find joy in it, even if it's a job that you don't really like? It's a good interview. I'd encourage you to check it out. It's from July 31st. Sam, I wanted to ask you, you had a fascinating take yesterday when we were prepping concerning your own experience of leaving a job, or should I say not leaving a job. You had a very good reason for every time you left a job. Could you share that, Sam, with our audience?
Well, I think the instinct of staying put at your job, at least while you have it, is pretty good, unless you're fired keeping your job.
Yeah.
I've always been confused about the idea of, I want to switch careers. I'm not too happy with what I'm doing. So what people do is just outright quit and then try to work it out. Rather, what I've always done is kept the job I had and started hunting on the side, usually growing from opportunities I have. That way, yeah, you're playing it safe a little bit, but it just seems much more wise, and you can make use of opportunities in a much more stable way.
Sam, that's exactly the
Then you don't have to panic and just settle for whatever job comes along. You can actually pick what you want.
Exactly right. The job transition before my job transition to FISM, so the transition before that one to the job that I took, and from that job I came to FISM, that transition, I kind of did what you said not to do a little bit there, Sam. I kind of left a job. I had a little thing lined up, but it wasn't something as solid as I probably should have had. I was already married at that point, so I had a wife to provide for at that point. Didn't do as good of a job at that. Thankfully, the Lord, in His grace, watched out for me, and I was able to do that with the transition from my former job to FISM. You know, Sam, I'm truthfully not opposed to the job hugging idea. I think part of it comes down to the fact that you've got to eat, you've got to pay the bills, you've got to provide for your family, and especially it becomes so sharp when you have kids. I found that after having multiple children, I've suddenly become much more willing to do certain jobs that I probably would not have been as willing to do when I didn't have kids. Now the stakes are higher. You have to find a way to provide for your family. So if it came to it, would I be a garbage man? Sure, absolutely. Would I be a janitor? Yeah, definitely. If
garbage man actually pays pretty good. So that might be a job you want to hug on to.
Yeah, absolutely. But would you, now I don't know. There's certain jobs that are considered maybe kind of lower on the totem pole jobs, being an aide for special needs children. I'd do any of that stuff. Absolutely. It means providing for my family. I do agree that there are inherent risks in staying at the job that you're at. And I also understand, Sam, look, it's easy for me to say that when I speak from a position of having a job right now that I absolutely love, and I actually look forward to coming to every day and genuinely miss it when I'm not here. So I get maybe I'm not exactly in the position to speak from someone who hates their jobs, considering the fact that I love mine, but I still think there's something to be said for longevity and consistent faithfulness for years at a time. That's a concept that we apply to our investing as well, Sam, that there's something good about that. If you can say, you know what, I've been at a job for years now, I've been able to build up a good reputation, to also grow, to get raises, to contribute to an employer-sponsored retirement plan. I mean, that's really good. Sam, truthfully, I'm proud of the fact of my 5-year anniversary at FISM is coming up at the end of this year. I have now been at FISM for more than half of my entire marriage. It's crazy to think about
impressive.
That, but it's fun. And I know.
But see, you're doing it because you love it. You're not doing it out of fear that you're not going to be able to find something else, and you're not taking risks because of that.
Yeah. And I know, Sam, you've been here even longer than I have, and it's the exact same thing. I think one of the good lessons here, folks, is that work is good, and no matter what you choose, it's certainly not a sin to leave your job. It's absolutely not a sin, but you have to do it in the right way. You have to do it wisely, and especially if you're a man that has a family to provide for, you have to consider that as probably the most important factor when you're choosing what job you need to be in, and you're choosing to continue to work in somewhere else or to stay in a job that you might not like as much. Good to be here with you all, folks. We'll continue this conversation on the other side of this break. We'll talk about that debanking that happened recently and what to make of that on Financial Issues. More to come after this.
Hi, Blair. You're live on Financial Issues.
I've been doing this 5 or 6 years. It's been the best financial decision I've made in my career.
My portfolio's doing better than the S&P over the past year, so thank you so much.
We had all of our money invested in mutual funds. The difference between how we did with them and how we are doing by following your stock allocation model is unbelievable.
Go to financialissues.org to get started today.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Finest choices of truth.
Welcome back, folks. Hey, today's show brought to you in part by our friends over at the Timothy Plan. I love Timothy Plan. I love the assurance of investing with them, with the funds that they have, knowing that they're biblically responsible. Art Alley and his team, they do just such an amazing job, and we're so thrilled to be partnered with them. So you can check them out, timothyplan.com. Also, folks, we do have a partner commentary that is out. You're going to want to read that. It's a very good read, as always, especially considering some of the things that I can't really speak to much here because it is the live show, but Shanna will speak to in more depth on tomorrow's conference call, which we also have tomorrow, by the way. So check out the commentary. Also, be ready for the conference call tomorrow, 12 p.m. Central Time, 1 p.m. Eastern Time. You should have received the alert with the access information, call-in number, all that stuff. If you didn't get it, check your spam folder. If you can't find it in your email inbox, go to the partner side of the website and click the alerts tab, and you should be able to see it right there. Again, it has the phone number. The phone number, by the way, folks, never changes. It's the access code that changes. So I would suggest keep that phone number on speed dial in your smartphone, and then just be ready to put in that updated access code for every monthly partner conference call. But it will be posted after the fact as well if you're going to have to miss tomorrow. We hope that you don't, though. We hope that you'll join us. Again, that's tomorrow, Thursday, 12 p.m. Central Time, 1 p.m. Eastern Time. A couple quick headlines here. The U.S. economy is maintaining its high S&P credit rating. Analysts are finding the Trump tariffs offset his tax cuts. Meanwhile, a Reuters Ipsos poll is saying 71% are fearing AI will permanently take workers' jobs. Sam, I know it's something that we've talked about before. I'm of the mindset that, and this is coming from someone who does not trust AI one bit, but understands that we need to reckon with it in the world that we live in. I think AI might more enhance the opportunities for jobs than it will necessarily take jobs. I'm hopeful for that for sure, and I think that's what's going to happen.
That's what the data is showing so far. I mean, of course, there's certain jobs that are going to go away.
Sure.
There's a lot of bookkeeping, data entry type jobs that AI will obviously replace, but I think it will also create many more new opportunities as well.
Yep, absolutely. Meanwhile, Scott Bessent is saying U.S. tariff revenues will rise substantially.
Yeah, he's upvoting his $300 billion. He's going to say it's a lot more than that, actually. So he even said initially that was an underestimate. He likes to hedge conservatively with his estimates, and now he's saying, yeah, it's probably going to be just a tad more, actually a lot more than $300 billion.
Nice. And finally, one more here. Over 20 attorneys general calling on the FDA to reinstate abortion pill safeguards. Now, Sam, is that safeguards to allow the abortion pill to continue to be accessed?
No, this is conservatives. They're trying to add new safeguards, or rather reinstate old ones from the abortion pill that just were removed under Democrat presidents.
Good. So we can pray to that end for sure, and also consider, folks, how you might help organizations like Preborn and the great work that they do in fighting for the lives of the precious little ones whom God loves and who we should love as well. All right, Sam, let's get to this headline here. So banks are now coming out and claiming that they were under pressure from some old friends of ours, as our founder Dan Celia used to call them, the Biden administration.
Pretty much. Yep.
What's going on here, Sam?
Yep. So this comes on the heels of our conversations with Nick Vujicic about being debanked. Also last week, President Trump revealing he himself was debanked, and now we might have a culprit. Now, it should be noted that this story comes from some anonymous sources. You always have to take those with a grain of salt. We don't know who they are or even what banks they work for. Anonymous sources always have an agenda. But even with that disclaimer out of the way, this is still pretty interesting. They are blaming the Obama and Biden administrations as the reason, saying they were under immense pressure to debank certain individuals and businesses, exploiting ambiguous language in the law to deny services, or even, get this with this language, quote, choke out companies disfavored by the administration. An obvious example of this would be gun manufacturers, which Obama, frankly, didn't like too much. Now, also, what's interesting about this was kind of like a mob boss technique where they were never told explicitly what was supposed to be debanked, but it was well understood. If a group was not liked by the Obama or Biden administration, we knew they were on the chopping block. One executive, he said this: these pressures were very, very real. When your regulator gives you a suggestion, it's not really a suggestion, it's actually an order. The political stuff is very real, and those pressures are real. Of course, Seth, this also led to banks outright denying services to new customers as well, with another official saying, it's pretty much safer just not to accept someone than accept someone we think the administration's not going to like, and then 6 months later say, you kind of messed up, you got to get rid of them. So this led them to being much more, let's say, conservative with conservative customers. What do you think, Seth?
Well, first of all, it makes a lot of sense. The work that Nick Vujicic and his team doing over at Pro-Life FinTech, starting that, makes a whole lot of sense here. Sam, I appreciate you bringing this up. It's a sad headline, but it's also one that should not be the least bit surprising, folks, with anyone with common sense. And forgive me for if this turns into a rant, but we have to analyze this in several ways. First of all, it is my belief that you do not hate the 12-year Obama-Biden dictatorship enough. Our founder, Dan Celia, as I said earlier, he rightly referred to this alliance as the Biden administration. It really was. But what was really happening is Barack Obama, who, if you remember, was president of these great United States from 2009 to 2017, was still pulling the strings from 2021 to 2025 when his puppet, Joe Biden, was president. It was really like a continuation of the Obama administration, and basically like he was president for 12 years. Let's not be fooled here. He was still ruling through his puppet. In our nation's history, I'll come out and say it, I believe there have been few administrations as disastrous and catastrophic as that 12-year dictatorship under these two men. Think about this. Obergefell, the rise of DEI, anti-Christian bias on social media, weaponization of a two-tiered justice system, topless transsexual fetishizers on the White House lawn to celebrate Pride Month. This administration, I'm calling it one administration, I know technically it was two, but this whole Biden administration was the most godless in our nation's history. I firmly believe that. And I do believe that God in his grace brought our nation to the brink in 2024. And he granted us an undeserved reprieve of grace and a second chance. Folks, we see oftentimes throughout history and throughout Scripture, which really is just history, it's biblical history, that God judges a nation oftentimes through wicked rulers, which means during those 12 years, we were clearly under God's judgment. God has shown his grace to us, not that we have done anything to deserve it necessarily, but he's shown us his grace to give us a chance to come back and obey him and confess him. That if my people who are called by my name will humble themselves and seek my face and turn from their wicked ways, then I will hear from heaven and heal their land. That's what we have to do. And we have a chance to do that, folks. We cannot be surprised to understand that during the Obama dictatorship, those 12 years, that rampant debanking of conservatives was happening, even though, Sam, you pointed out, it's almost even more insidious that there wasn't an official ruling, but it was more the mob boss mentality of...
It was the who will rid me of this meddlesome priest type thing.
Exactly. You could do whatever you want, but we'd maybe suggest you do it our way.
And we know they did this. There's been a question about, do the banks want to do this? Are they under pressure to do it? It could be a mix of both. It probably depends on the bank in some way, who's in charge. But this is well in line with what we know about the Obama administration and how it's kind of backdoor through indirect threats and pressure, leveraged organizations. We saw this with social media, particularly Twitter and Facebook, saying that they had Fed officials come to them and say without saying, hey, you really need to shadow ban conservatives, knock them off your platform, or at very least make sure they're just shouting into the void and no one sees them. That way, you're the ones doing it. We're not technically violating the First Amendment, but we do think that's a good thing you can do, or there might be some consequences. We're not going to say what they are, but there might be some.
There is a paper trail that leads to these guys, in spite of the fact that they did a bang-up job to try to cover it up. That's for darn sure. And Sam, it's interesting. That stuff was happening during the Obama proper administration. So up until 2017, his 2009 to 2017 administration. But of course, it was also happening in much more greater numbers and in much greater scope during the Biden years of the Obama administration, what we just came out of the last 4 years. The second thing I want to share with you here, folks, in light of all this, is that you have got to fight for your country. You have to. We talk about that on the show all the time, and I know it's probably going to sound overused, and I get it, but fighting for your nation is a biblical command, okay? It's a biblical command. A lot of people try to say, no, it's not. We just got to be about the, we got to be about the eternal kingdom, and we can't busy ourselves with trivial matters down here. I disagree. I think that's actually a really foolish way to go about things, because God has commanded you to be a good steward of everything. And I think, I could be wrong, but I think your nation is not somehow excused from the definition of everything. You are called to be a good steward of your nation as much as you are your money and your family and the gospel and your church and your city.
Especially a nation like ours, where technically we are the sovereigns.
We are. That's exactly right.
Not the president of the United States. So really the end-all, be-all authority rests with us. So the stewardship responsibility is so much more.
According to the Constitution, according to our founding fathers, we have such a heavy stewardship responsibility in our nation. Sam, you hit it right on the head. It is our nation. Here's the deal. I'm going to say this too. Trump is not a messianic savior. He's not our savior. We already have one. His name's Jesus Christ. However, God has given Christians, at the very least, in his grace, barring something catastrophic happening to the president, and I pray it doesn't, God has given us a 4-year window that we're now in 6-7 months of, so we've got about 3.5 years left to learn how to be good stewards of our nation once again. And we have to take this opportunity, folks. We have to make sure that men such as the Obama-Biden cabal never again have that so great of a power in our nation. So we got to steward our vote well for the sake of our children and grandchildren, by the way. Finally, I'll say this, and Sam, I'd love to hear your thoughts on this too if we have time. The bankers who caved to the Obama dictatorship and debanked conservatives and Christians to keep political cred, part of me wants to give an extension of grace to them, but the larger part of me just says shame on you, because you also had a stewardship responsibility. Those bankers who obeyed this cabal sort of ruling, they had an obligation to their customers. They did not fulfill it. They obeyed the state. They saved their own skin rather than doing their job. And folks, this has to be a lesson for us. Acts 5:29 says, we obey God rather than men. We obey God rather than men. I hope the banks that caved can be somewhat of an archetype for you of what not to do.
Well, why didn't they say something at the time?
Absolutely. If they're so concerned about it now.
Even if you say,
right.
guns to my head, I had to debank so-and-so. Well, at least come out and say it, too. Say, like, here's why we did it. Absolutely. It's because the government's putting so much pressure on us. We don't want to do this.
That's right.
And, put the blame back on the government. At least then they'd be fighting back in some way.
That's right. And Sam, I do think the reason they're coming out now is because it's safe to do so. It's convenient to do so. And that really is shameful. And listen, I understand. It's easy to say this. I'm behind a screen. I'm behind a microphone. And we have a friendly administration. But folks, it becomes much harder when you are risking losing social credit, when you're risking losing popularity, good vibes, good relationships with family and friends. I know that one personally. We must be faithful to God rather than men. We must obey God rather than men. I hope that can be of encouragement for you here, folks. We've got to take a break now. If you have to leave us, we hope you have a great rest of the day. Mark Minnella is coming up on the other side of this break. We got more financial issues right after this.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
Fear and uncertainty can cause us to hold things tightly and rely on ourselves. But during uncertain times, as believers in Christ, we are called to surrender fully to our sovereign God. The call to surrender to Jesus is one step in our growth in holiness. And it doesn't just mean you give over a few things. It means He gets it all, including our finances, our investments. Learn a biblically responsible investment strategy proven over 25 years. Keep the money God has entrusted to you out of companies that participate in things that God detests. Fully surrender. Become a Financial Issues Partner today. Learn more by going to financialissues.org/join. That's financialissues.org/join.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant, and my family, they were like, no, you're not having this baby. I met Miss Linda. She told me about all the great resources, like they offer free baby clothes, they offer free classes, stuff for mom. She prayed with me. She told me to ask God to, guide me to my decision. She made it completely like my choice. She offered to get me an ultrasound, and I found out I was 6 weeks pregnant. That's where I very first heard the heartbeat of my son, and I was told, whatever I gotta do, whatever comes my way, I'm just gonna, have this baby. It was really a great thing that I was led to the choice to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Folks, welcome back to Financial Issues. It is great to be here with you all today, and I'm excited because we've got a special guest joining us, dear friend of our ministry, my personal friend, Mark Minnella. Mark is a financial expert with lots of great insight, FISM contributor. Mark, it's great to have you back, brother. Welcome.
Thanks. I was thinking about it when you said financial expert. I think that's a term they give to somebody who just grows old in the industry.
That's right. Well, I'm not going to comment on your age, but I'll just say, listen, brother, gray hair is a crown for the aged. Okay, that's all I'm saying. All right.
Okay. So, all right. We'll go with that. That's that.
I'm working towards that as I see more and more gray hairs in my head, which thankfully the camera zoomed far back enough.
So you're telling us this is a coping mechanism.
That's right.
Seth.
Exactly.
Okay.
That's exactly what I'm saying. Exactly what I'm saying. Hey, Mark, before we get to our first topic here on earnings reports, let me just say quickly that the market's just opened up. The Dow Jones is continuing in its trends from yesterday, positive, up about 1/5%. Meanwhile, S&P 500 is down about 1/8, and the NASDAQ down about 0.5%. So mirroring much of what the markets did yesterday, actually. So, Mark, one of the big things that's going on today, and obviously these last couple weeks, has been earnings season. And I'd love to get your expertise as we start here on just how to rightly decipher earnings reports. So we're coming to the end of the earnings season for Q2. A lot of companies have already reported. Many of them have done well. Sam and I mentioned some of the big retailers that reported this morning. We've got Walmart coming tomorrow. Let's start here, Mark. How do we rightly read the room when companies report earnings?
Well, that's a great question. Actually, the first part of the question I like better. In general, the idea of how do we look at all this? And I don't know if you noticed it or even felt it, but every time they start talking about quarterly reports, people start leaning in and they start being drawn in. And it's almost like the sirens of Wall Street are calling, and everybody's focus starts going off into the different direction of the quarterly reports. And I think we really need to be concerned about that, because this is something that Dan really had a heart for, is that we're long-term investors. The short-term isn't that important. It's important to know because it could be indicators of a longer-term trend coming, but not to be sucked into it. And if you look at quarterly reports, we see that somebody say, well, they missed their, analysts were predicting this and they missed it, and they this and that, and I've seen the stock market drop 3-5% on these type of things just from missed expectations. Of course, that doesn't last. It's a blip. But we don't want to be sucked into that. We want to make sure that our heart stays true to the long-term investing. Now, when I started thinking about this, I also started thinking about oftentimes people will confuse long-term investing with long-term horizons. And that's something else that Dan really tried to explain over and over, and I think it's really important.
And Mark, how are those two things different? Because in my mind, they sound similar. But
well, they are, and they're often interchanged, but they're not.
Okay.
Long-term investing is how we approach, how we look at a stock, whether we're going to buy it or not. When we look at a stock, we're looking at a long-term investment. We're looking for something that's made well, a company that's working well, a company that's financed well, that's led well. All those kind of things will give us a long-term investment as this company continues to grow and grow and grow, hopefully. Whereas long-term horizon, a horizon might be, I'm retiring in 1.5 years. Well, I don't want to base my stock picks based on I'm retiring in a 1.5 years. That's what our asset allocation comes in. By diversifying and moving our changing our diversification based on our time horizon, moving more towards safer assets or less volatile assets as we get closer to that horizon. But that doesn't determine the stocks that go into that. Did that make sense?
It does. No, it absolutely does, Mark. Thank you.
Okay, so we need to approach the quarterlies the same way because we get pulled into it. You'll find, they missed their expectations. They had a blip and we seen this or that in them, and all of a sudden that stock takes a hit. Well, so what? Stocks take hits. What caused that blip? What caused that thing? But all that said, I just want people to be aware, our investors, the financial issue investors, the partners, to realize that quarterly reports are nothing to knee-jerk from. They're just information that over time, trends are formed from that help us understand things for longer-term investing. And taking it inside that bubble, that understanding, we can look at quarterly returns and not get seduced by Wall Street, which is trying to get you to look at the short term, get emotional, and then start making moves, because Wall Street, the more moves made, the more Wall Street makes. price. Bottom line, whether those moves are correct or not. So we want to make sure that we're not seduced into that, like those who don't have Jesus Christ as their Savior, those who don't have God as their source of peace, because those people are putting their hope in the market, not in God. We have God. We know where our peace comes from. We know that God's going to provide our needs, and He provides so much more, because it's the froth of those blessings God gives us that we put in the markets. So we're at peace no matter what happens in the short term there. We have peace that surpasses all understanding. Okay.
Absolutely.
And looking at all that, let's take a look at, what do I look at? The first thing I look at is the income sheet. I mean, it's bottom line, revenues. That's what it's all about. You know, what is the company bringing in? Are those revenues positive? Growing? Do we see a trend? And even if they're not growing strong, like straight up, are they year after year, quarter after quarter, are they increasing? That's very important to be looking at. We want to see those revenues growing, and we want to look at the net income as well. That's very important. Net income, like where revenues is the top line, we want to look at the net income on the bottom line, because that tells us how well the company is managing those revenues and managing their business. Now, there can be things like one time, building a new factory. So maybe some debt was brought in, maybe some expenditures went out, capital expenditures, those kind of things that can make that net income and the bottom line numbers look bad. But between the two, you can tell pretty much. And that gives you an idea of what's going on. If those numbers are heading down, you need to start questioning why is that happening and dig deeper. But the first thing I look at is that and the balance sheet. The balance sheet is so important. I have this thing about debt. It really concerns me. And I've seen over the last 30 years, 35 years that I've been in the industry, small companies, micro companies, even some large companies go under because of their debt. The debt just keeps accumulating and growing and growing. And who's ever running the companies, they seem to think, well, if I don't have enough revenues coming in, I'll just finance more. And pretty soon they can't manage their debt. So we want to look at the balance sheet and look at the assets and liabilities and see if they have, the cash reserves to manage the debt that they're carrying. And is that debt increasing steadily over time, or is that debt coming down over time? Now, I know there are some analysts, most Wall Street analysts that would say there's nothing wrong with debt. But in my book, and my book is the Bible, we are warned continuously that we should minimize debt, to stay away from it, not presume upon the future. And those companies that have heavy cash reserves, even if they have a little debt, they can pay it off. They have more reserves than debt. Analysts would say, well, they're not being efficient with the reserves and that kind of stuff. I say they're being very efficient with the reserves by not having debt. Those kind of companies, when the market changes, when the economy slows down, if we went through a serious recession or a serious depression, those companies will still be around. Those who had the heavy debt won't. So when we're looking at long-term investing, those ratios, debt to equity, debt to cash, those are very, very important.
Folks, talking to Mark Minnella here. Mark, that's great, brother. Let me ask you this. What about a company's forecast as well? Because I know that's something that comes out with earnings reports too. What do we make of this?
The forecast, it is what it sounds like. It's just somebody telling you what we think's going to happen, predicting the future. What does the Bible say about predicting the future?
We can't do it.
We can't do it. But, we can get the issue there is, think about all the companies when things are going good, they predict lower. They predict the future as good, maybe not as good, so expectations are lower so they can beat those expectations. There's a lot of manipulation that goes on, is what I'm saying. Yeah. When things are bad, they try to make it sound good. So I don't pay a lot of attention to those predictions from the companies. They just don't mean to me what they do mean to other maybe financial analysts or Wall Street analysts. I don't trust them. And we have to be very careful, especially with short-term numbers as well, because they're manipulated. They can be manipulated. They're not always manipulated. And yes, over time they are seen. But think of the corporations in our past. The one that just jumped to my mind was, remember Enron? Or you might be too young. I don't know.
I remember people talking about it.
Yeah, Enron, they went out of business. They kept multiple sets of books. They reported on the books they liked, and and they just issued more debt than they could handle. It was just really crazy.
Mark, I'm going to interrupt you for just a second, brother, because I want to hear more of what you have to say. We're coming up on a break here, but let's continue this conversation on the other side of the break. Folks, I got Mark Minnella with me again. A great conversation, Mark. I'm enjoying it so much and learning a lot. If you've got questions, folks, make sure to put them in the chat as well. Our chat's open right now. We'll be sure to say hello to those of you who have responded. Make sure to say hello as well. We'll be right back after this break. Stick around. Morning, Mark. You're live on Financial Issues.
Good morning. I'm a recent partner. I just desire to serve God in every way. This is kind of the last piece of finances that needs to be taken care of, and I'm grateful that I have you to seek wisdom from today.
We're so glad that you're desiring to honor God in the way that you invest. It's a great thing that we can be here to help and encourage you.
Go to financialissues.org to get started today.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Grateful to have each of you on the show this morning. Our chat audience is lively today as usual. George from North Carolina saying, very good advice, Mark. Reminds me of my father's advice many years ago. That's awesome. George, I'd love to know, we were talking during the break, Sam brought up a good point. What was your father's advice? Exactly. I'm sure it was good advice, but I'd love to know exactly what it was.
If it's a father's advice, it's good advice.
I'm sure it is. George, that's awesome. And George, again, from North Carolina, thank you for your encouragement, brother. I always see such encouraging comments from you in the chat, and it just means the world, man, so thank you. Good to see James from Texas. Good to see Eddie in Tennessee. We've got, who else? I think the other George from North Carolina is in there. Actually, both Georges are from North Carolina. We've got, who else is in here? Lisa. Hello, Lisa. Nice to see you there. William from Mississippi is in the chat as well. Daryl, Dr. Daryl from Texas. Andy from Kansas City. Hello, Andy. Nice to see you. I'm sorry, not Kansas City. Andy's just from Kansas. I'm not sure how close you are to Kansas City, Andy, but it's good to see you there nonetheless. John from Alabama. Claude from Louisiana. Nelson, thank you for your encouragement, Nelson, on my Dan rant earlier. I hope it wasn't too crazy, but just had to share that about the Biden administration, of course. Nathan from Mississippi. Uncle John. Debbie from Kentucky. Good to see you as well. Brian and Kara. Stephen in Oklahoma. A lot of people on the chat this morning. Great to see you guys. All right, Mark, let's switch gears here for just a moment, brother. I would love to hear, and you can go as deep as you want to with this, Mark. I'll give you free reign to do as much as you want with this. I'd love to hear some of your personal experience when it came to investing. You've been doing this now for decades, a lot longer than I have. And again, that is not a comment about your age. A gray hair is a crown for the aged, my friend. But let's
start already established. You're coping.
That's exactly
You're coping,
right.
Seth.
That's right. It's a coping mechanism. Mark, let's start here. What are some of, let's say three. What are three of the most important lessons that you have learned during your investing career?
Oh, that's a great question. I would say that to remember that the first lesson, the most important lesson, well, as an investor, the most important lesson is that emotions are the enemy. That would be the most important thing, because of all the mistakes I made, it's been from emotions in the markets. It's from letting my emotions get the best of me. And that probably takes me to probably two more. One is that if you're going to be an investor, you should have rules on how you invest and then follow those rules. So emotions are the enemy, have rules, follow those rules. Those rules should be derived from things you can prove. You can back test or you've lived through them and there's proof to them. And then follow those rules until you find a way to do it better and you can prove it's better. But don't let emotions get in there, because emotions are what cause us to do silly things. Like I remember, oh my gosh, I can't remember which pullback it was because it was quite a while ago, but it seemed like it was going to be a huge pullback. And I started watching my portfolios I was managing at that time dropping. And I'm talking about more than 10%, 10, 12%. Yeah. And I'm starting to panic. So I start getting rid of all the weak. I got rid of about half of the portfolio within 2 days of the stocks, the weaker stocks and those that weren't made of the same metal like we were talking about earlier when we were talking about quarterly reports. I started getting rid of those and the spec stocks and stuff. And within days, the markets turned. And of course, it was the spec stocks that went through the ceiling and I missed it. And it was every other stock that were following those up. So I missed probably one of the biggest opportunities to make money that year in that market from letting my emotions run and the fear set in. So remember, emotions are the enemy. Don't manage your portfolio on emotions. If you're doing that, walk away from the computer, get away, come out to Financial Issues, watch some videos, calm down, go before the Lord, pray, get to a place of peace, then go back and manage your portfolio. And then manage it in alignment with those things you know to be true, the longer term investing. And things like that. Stay in line, knowing that your asset allocation is there to absorb some of the risks, to cut some of the volatility out of there for the shorter term horizons. But investing in itself is a longer term proposition.
Mark, it reminds me of what the scripture says, and forgive me, I can't remember where it is in the scriptures. I know it's the Old Testament, but talking about how the heart is deceitful and desperately wicked. And boy, we've got to lead our hearts, because you're exactly right. Our hearts are going to naturally lead us in foolish directions. We're going to make rash decisions, unwise decisions. That's why what's so much more important for us is to focus on what we know. Just like what you said, focus on what we know rather than on what we feel. I think that's so good, man. And thank you for sharing that with our audience.
And it's really good to be communicating with other people. Yeah. I used to have a meeting on Fridays with other managers, and what we would do is we just discuss what we're doing and why. And some of them were very emotional, and their portfolios never did well. Yeah. The ones that they were managing, the most emotional portfolio managers I knew, their returns were dismal. at best.
Yeah.
You know, you might as well have just socked it away in a money market, and you would have done just as well or better.
Yep.
You know, over the same periods of time. So emotions. Remember, I mean, think about this. I mean, you're working on stuff, and all of a sudden, it's not just you're getting scared because the markets are pulling back, and you're, how am I gonna, what happens if it doesn't come back? Well, I've never seen a market that didn't come back since the markets began. That doesn't mean they won't. I'm sure someday after there's something someday that might happen, biblical or otherwise. But that's okay. We don't have to worry about it at that time. What the markets do come back, and even in terrible economic times, markets can do good as well. You can see gains in markets. But what happens is our minds start projecting. It's not just the fear. It's like, oh, I'm worried about my income. I worked so hard for this. I worked so hard for these investments to put this money away, blah, blah, blah. I'm not minimizing that, but it's God who decides our income. But anyway, it goes past that. We start projecting to the future. We start seeing all sorts of dismal things. We start making these movies up in our heads about what's going to happen if this all crashes, and how am I going to, this and that, and who knows, I might end up like that guy or this guy, and all these different kind of things. It takes over and it steals our peace.
Yeah.
And we can't let that happen. Wall Street and stocks, they've become idols in our society. In the early 70s, less than 30% of households were in the stock market. We have over 80% of the households in the stock market today.
Wow.
I mean, think about that. It's become an idol, and it's replacing our idol for security, our God. We can't let that happen. There's two things happening here. One, the emotions that you're allowing into your portfolios are going to cause you to make mistakes and knee-jerk reactions, and they're going to steal the peace that God has given you as well. So step away from the computer when that starts happening. Get on your knees. Go before the Father. Get to that place of peace. Then you can come back and manage your long-term portfolios.
It's great stuff, Mark. Thank you. That verse I mentioned, by the way, I apologize, I had to find it. Jeremiah 17:9 is the heart is deceitful above all things, desperately wicked. Who can understand it? Such a good reminder for us, brother. I do appreciate that. Mark, this might be the only thing we have time left for, but all of us at some point have made a financial decision that we regret. We have bought something that we, maybe sold at a loss, bought something we couldn't afford. How would you encourage those of us who've done that to have steadfastness, fortitude to come back from that?
Well, okay. So we make mistakes. That's yesterday. Yeah. God doesn't call us to be looking back and chained to those mistakes. Oftentimes we let fear, we let our emotions again chain us to our past mistakes, including making mistakes in the market, overreacting, underreacting, whatever it may be. We can't let that happen. If you really look back and you see what's guiding you, if you're being held back by past mistakes, it's not the past mistakes holding you back. You're holding on to the past mistakes. It's time to turn towards God. Look forward and look up. Look up and start talking to God again, because that's where our peace comes from, and that's who's going to supply all our needs. So you do that, and you start moving forward. You meet with godly men and women who are trying to do the right things, even in the stock market. And this is so important. Financial Issues is here specifically for that. There's all sorts of reasons to come to Financial Issues, but the main one is it's focused on glorifying God. It's focused on investing in a way that doesn't grieve God's heart. And by doing that, we honor God, and God promises us all sorts of blessings from that. Now, I'm not saying he's going to dump cash in your lap, or every stock decision you make is going to blossom, but it does mean he's going to bless us. And I think one of the best blessings of that is the peace that we receive, not only in the future, but right now.
Well said. Mark,
so we need to be all over that and realize that.
Absolutely. Mark, we've come out of time, brother. I appreciate your insight and wisdom so much, man. I always enjoy talking to you on and off the air. Hey, folks, one quick thing I forgot to mention earlier in the show. We have our Tesla petition right now. That petition is live. We've got just about 500 signatures on it right right now. That's going to be running live until Friday. So you've got about 2 days left. If you've not signed it, you got to sign it right now, folks. We're going to get this over to Elon Musk's desk once we close it on Friday. So make sure that you sign it today. You can do that at financialissues.org. Just click that sign our petition pop-up that comes up on the page. Great to be here with you today, folks. Remember, everything you have belongs to the Lord. Let's be good and faithful stewards with it. God bless you all. See you next time.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.